A mixed bag for sure. Hi, this is Dean Jenkins with FollowMeTrades.com, and this is the market update for July 29th, 2018. And we're taking a look at what happened last week and what we can expect for the upcoming week. And I say it was a mixed bag. We had all kinds of information coming out. We had a great GDP number on Friday. All signs that the economy is healthy, and the chief financial advisor for the administration said, "Hey, this isn't a sugar high. This has the chance to continue." So that's really good news. But also we had some big high-profile companies previously, Netflix, and then Facebook, Twitter take some big hits. Intel disappointed and had a pretty big hit as well. So it's a real mixed bag. A lot of good news, some bad news, and I like how I'm a news junkie. I scan headlines, and here's a article in the Wall Street Journal. The headline is "Stock Market Fights Off Big Tech Stumbles." I love it when reporters anthropomorphize the market, give it human tendency. So the stock market's fighting off big tech stumbles. But it's a pretty good article by Akane Otane, and he makes a really interesting point that something different going on in the market capitalization and distribution than we saw in previous times. So he says, hey, the five biggest companies in the S&P 500, and those are Apple, Amazon, Alphabet, Microsoft, and Facebook, they have a smaller share of the overall market capitalization than the 1980s market correction, the 2000 dot-com bust, and the 2008 financial crisis. So the impact of these five biggest companies is less than it was historically. So, what does that mean? It's interesting that maybe, sharp moves in some of these companies aren't going to have the kind of impact on the overall market that they had previously. So we're looking at the S&P 500, and Facebook was down, about 20%. Intel was down 8%. Twitter took a big hit. Netflix took a big hit. And you can see here in the S&P 500, the pattern that we had been talking about for a couple months now of a high, higher, low, high, higher, low, high, higher, low, new high. We made a new high on Wednesday. Friday it pulled back a bit. Not too big a deal. It was down 0.66%. The Nasdaq, of course, had a bigger hit, more weighted to some of those technology companies. But the overall impact of the big market of some big headline kind of news was kind of muted and offset by some really good news and some other good earnings. So price and volume, of course, are the only realities in the market. They're the only thing that really is happening for sure. And as it reflects, price and volume reflect the reaction of all the market participants to all known information. The problem with that is, new information comes in and they react. So we do have more information coming out this week. We are in the absolute throes of earnings, and so you can see here the calendar. On Monday the 30th, 146 companies. On Tuesday, 235, and so on. So a lot of companies reporting earnings this coming week. So we've got 1,171 companies reporting earnings this week. This is kind of the peak, and now you can see next week we still got a fair amount of volume, but it starts to taper off. So the market's going to be assimilating new information. And we've probably, if this pattern's going to continue, and it's been pretty consistent, we could expect it to drift down to the Ichimoku cloud. Won't go straight down. It'll be a series of little steps. But that, just from what the pattern's been so far, that looks like what we could expect is, again, a high, pull back to support, high, pull back to support, high, pull back. We've got a nice high, and we've got this previous high. So I think the probability is to pull back to support, but I don't know that it will be dramatic unless there's a big shock to the market. I think the three things that are critical to trading in this current market with so much new information coming in, mostly in the form of earnings, is to first only trade individuals that have already reported, so that there's not going to be a shock to it. Second, of course, you want great setups that meet your criteria. And then third, that they would not be correlated to the major indexes, because if they're perfectly correlated, the moves probably aren't going to be that good. So it's great to find setups that have a very low correlation to the overall market, that are moving according to their own kind of separate information, their own pattern, and some of those can be quite dramatic and quite good. So that's what we're trying to focus on here at followmetrades.com. So again, lots of information coming in. The market is going to be digesting it. The probability is for a very small pullback back to support on the S&P 500, the broad market. And with all the information coming in, it, as always, we always trade safe, but I think it takes extra vigilant, and I think it's great to look for things that have already had their information released, the market's already responded to it, and that perhaps aren't moving in lockstep with the overall market. So that's what we'll be doing here at Follow Me Trades as we look for new trade candidates, trying to stay ahead of things here and continue to carve out consistent profit. Well, that's it. Take care, trade safe, keep the winners big, losers small, and we'll catch you on the next update. Thanks.